let's talk a little bit about some of these IPOs that are out there. They're,
Oh yeah.
you know, that are kind of busting. You know, you got Uber, you have Lyft. Last year you had Snapchat. These tech companies that are, you know, of course, great products, have all had their IPOs come out in the last, you know, let's say over the course of the last year. Lyft and Uber were much more recent than that. And quite frankly, the IPOs were great. In other words, they raised the money they wanted to raise.
Sure.
But the post-IPO performance has been horrible.
Yeah, the stock prices haven't done anything.
And it comes down to it's because they built businesses that are supposedly great technology, but they don't make any money.
Right.
And I think I was reading a report on Uber that was basically saying they're not sure they're ever going to make money. I mean, what a business model that is.
It sounds a lot
and
like
yet somehow it's worth 30 or 40 billion dollars.
It sounds a lot like 1999.
Exactly.
Where you didn't need any profit, you didn't need any revenues. At least
you just needed .com next to your name.
Exactly.
If you had .com,
yeah,
you were going to get money.
Nowadays it's similar, but if you're a disruptor, you get the money.
That's exactly right.
You know.
Yeah, and it's a good way to say it. If you're a disruptor.
Yeah.
To technology.
It doesn't matter if you're making money though, like you said.
I mean, Uber's earnings came out last week. $3 billion of revenue and $1 billion of losses. That just to me is a baffling number.
Yeah. Now,
and it's not like it's a new business.
Right.
It's a business that's been around.
Oh,
It's
yeah.
mature, and they're trying to grow.
Right.
But
now, you know, if you think about Amazon, they purposefully kept their earnings low and pumped everything back into spending and to build. But there's only a few of those type companies.
But remember, Amazon had to build distribution centers.
Yep.
Uber doesn't have to build anything. They don't buy cars.
Yeah.
Okay. They hire independent contractors to work as their employees. All they're doing is marketing their business.
Yeah, you're right.
They're trying to market their business and get new customers.
That's a good point. They don't have a ton of capital investment.
Yeah, so they're basically trying to buy up business, and what they're finding out is maybe once you created this competition, maybe they can't charge what they need to charge to be profitable.
Right.
So, yeah, so it's a good question. I think it's like anything any investment you're gonna make, when it comes public, you have to just look at what do you have to pay to acquire the stock. You're buying earnings in a company or potential earnings in a company, and you always want to make sure you're paying a fair price. IPOs, especially of technology companies, get a little extra hype to them because people have usually been able to hear about the company for an extended period of time before it becomes public. So there's a little bit of euphoria around, you know, whenever, especially a technology IPO.
Yeah.
But, you know, you go back to the days like when Google went public, there was euphoria around that, but it turned out to be a good investment because you could see the business model where they were going to make money.
It's not, you didn't see it clearly, of course.
Yeah, that's right.
And some people think they see the Uber business model eventually working, of course, otherwise it wouldn't be priced where it is. But not all of these companies that start out losing money like this are going to survive.
Yeah.
And
you take the more recent example probably was Facebook. There was a lot of euphoria when Facebook first came out.
Right.
In the first couple of weeks, the stock did well. I think it came out in the 30s. The stock went into the 40 something, maybe almost 50. And then, you know, 6 months later, it was trading at $18.
$17.75.
And that's when it became a good price because you could see at that price, you felt like you were paying a fair price for their future earnings.
Right.
And sure enough, it turned out to be a great investment. The stock's now almost $200, like 170 or something like that. So it's, you know, with an IPO, it's no different than any other investment you're going to make. And even buying a house, it's what's the fair price, and make sure you're paying the fair price.